All right, so welcome back. Thank you for staying with us. We now get into our last segment of today's episode, and that is our market analysis with Treasury dealer from Nedbank Eswatini, Nozi Busizo Dembe. Nozi, welcome to
Thank you, Lulu.
Business Watch. Yes, we get into our markets today with the rand. Starting off with the rand, what's happening with the rand?
So on Monday, the rand was rather muted. This is because of the uncertainty around the trade tariffs that are going on, that are weighing in on markets. Over the weekend, President Donald Trump announced that he'd be imposing 30% tariffs on two of his largest trading partners, being the EU as well as Mexico. We know that South Africa is also facing 30% tariffs, as well as an additional 10% tariffs due to its affiliation with BRICS. But relatively, the rand was muted on Monday. Yesterday, however, we did see some change in the rand where it firmed a little bit, primarily due to data that was published on mining production in South Africa, as well as U.S. inflation data. Okay. So the mining data in South Africa showed that mining output increased by 0.2% year on year in May. And the U.S. inflation data showed an increase of 0.3% for inflation in the U.S. So it seems like inflation is trending upwards. We know that Jerome Powell, being the Fed chair, and President Donald Trump has been at loggerheads about interest rate cuts. But with the data suggesting that inflation might be going up, as Jerome Powell predicted, it's not likely that interest rates are going to be cut. Yet we know Donald Trump has been lobbying for an interest rate cut for a while. So the expectation there is that they'll be at loggerheads for some time. Is this expected? Probably, because the expectation from economists was that the tariff wars that are currently going on would result in inflationary pressures, right? So the economists are actually suggesting now that the inflation for July and August might be even higher because businesses are expected to currently still be selling off merchandise or goods that they bought before the April announcements. Okay. So they're still selling that off. And then after, maybe from next month, in the next couple of months, they'll start selling goods that they will have recently bought at the new higher inflated prices. So there's going to be a lag that's expected between then and now. So July expected to be even higher, August even higher, but that means interest rates are not likely to be cut anytime soon. Right. At present, we have the US dollar currently trading at 17.9150. We have the euro trading at 20.8084 and the pound trading at 23.9896.
All right. So just with the little time we have, let's quickly move on to commodities and take a look at the price of oil and Brent crude and gold. Price looks to be decreasing. Why is that so?
Yeah, so the price of oil has been going down due to the uncertainty around tariffs, but this is recently being offset by OPEC's reaffirmation that they expect an increase in demand of oil for 2025, driven by the US, Brazil, and Canada. The price of gold, on the other hand, has been increasing for some time. And after the U.S. inflation print yesterday, it's increasing even further. But these are really uncertain times. So we're expecting to see some movement there. But again, gold always benefits from uncertain times because of that safe haven mentality that we have.
All right. And lastly, S&P 500 has also, it looks like it's down, and the FTSE is down as well. What's happening there?
The S&P 500 yesterday also closed in the red. In fact, 10 of the 11 industries or sectors that make up the S&P 500 all closed in the red. The only one that closed in the green was tech, mainly driven by NVIDIA's performance. The FTSE is also in the red right now, primarily due to the U.S. inflation print that came out yesterday, indicating that bets against interest rate hikes should be off, and there might not be a cut yet. Interest rate cuts. The JSE All Share Index showing slightly positive performance compared to the other two, despite the uncertainty around trade negotiations.
All right. Any more additional data we can expect this week?
Today, probably now as we speak, actually, we should be expecting South Africa's retail sales sales data to come out, and that normally is an indicator of where the economy is going. So, so that should move markets too.
All right, thank you, Nozi, for your analysis today. Well, there you have it, Nozi Busiswa-Dembe, for today's market analysis. We've come to the end of our episode this Wednesday. Thank you for tuning in. And for more details on Nedbank's investment solutions, do visit any of their branches countrywide to find out more. If you've just